Morning, Steve Freed, still in Nashville, but I'm soon going to leave on a jet plane heading back to Chicago. Yesterday afternoon, we had a really good panel talking about export grain flows and the possibility that increased acres in the Black Sea and South America, especially Brazil, could continue to force U.S. export share down from these lows that we're at now. I think that we're seeing a bounce in prices in front of the export sales data. Continue to see some short covering in the wheat market. And so we'll have to see if any sales show up on the bean side of things to China, any sales show up on the corn side to normal Brazil buyers. From a price standpoint, Ukraine is still cheaper corn than U.S. China might be looking for nearby Ukraine corn and might be looking at new crop Brazil corn. But with these tanks going to Ukraine, they could see an escalation in the war, which could prevent some exports out of the Black Sea. On the wheat side, I think that it's still dry in the southern plains. The temperatures won't probably get as cold as they were forecasted yesterday. But there is, at the end of the model, some precip forecasted for the southern plains. We also note that in the soybean market, nearby crush margins have dropped down to $1.87, and soybean oil as percentage of the crush is dropped below 40%. Palm oil values continue to be on the low side with some demand concerns. And everybody's watching China to see if the reopening helps their imports of raw materials. The copper prices overnight are lower, while crude's a little bit higher. So you've got the soybean market testing the upside of the trading range. Corn pretty much continued in a sideways trade along with the crude oil market, and wheat is up against some pretty strong resistance on a downtrend line from last year's highs. So we'll kind of watch and see what the export sales say. We'll be watching weather conditions here and in South America, and then watching if there's any escalation in the war in Ukraine. Still looking for Fed to raise rates, but maybe not as much as feared a month ago, but certain inflations like rent, still food, things of that nature continue to be high. Which means that the Fed might try to increase rates, but may not be able to get inflation down to their 2% target. As always, these are my thoughts, not those of ADM Investor Services. Have a safe and good trading day.